Management. How at Guerrilla Trading do we manage our trades? Well, it's very simple. We follow the trend. Okay, we let the market show its hand and we allows us to then not have any guesswork. So what do I mean by that? Well, we are trend traders. So what we are looking for is we are looking to identify an uptrend and a downtrend. And you can quite easily see that by the two diagrams I've drawn here. So as price goes up, pulls back, you get an impulse break, back, impulse break, and this is showing an uptrend. And on a downtrend, we get a sell-off, a pullback, another sell-off, a pullback, a sell-off, and you can clearly see that it's a downtrend. So what we've done at Guerrilla Trading is we try to simplify things as much as possible for all of our members so that you can learn to become consistently profitable with much less psychological burden. Now, you may ask what I mean by that. Well, a lot of people find that when you don't have a set rule for management, you tend to get too much discretion in the market. And when you have discretion in the market, it plays on you psychologically because you never really know where you want to get in, when you want to get out. For example, you don't really know when to get out of the market. So what we do at Guerrilla Trading is we let the market show its hand. Because if you look at a basic uptrend, right, you can see the market's going up, we get a pullback, up, pullback, up, pullback, up, pullback, up. Now, if we're trend traders and we know that the market moves like this, where do you think the best place to put our stops are? Well, the best place is if price goes up, pulls back down, right? Now, we don't know how far this low is going to go down, but when we break this high here, once price breaks it, it confirms to us that this is our low. So if we are in a trade and we break a high, we put our stops below the most recent low. Now, why do you think that is? Well, look at this trend. Do you think that would be the safest place until we get another counter trend move? Of course it is, because there is as long as the trend is going to continue, you are never going to get stopped out. So as we go up now, say we're in this trend, we move up now, we get another counter trend move. Now, how do we know it's counter trend? Because the candle's highs, okay, the next candle will not take out the previous candle's high, which means it's counter trend. Now, we don't confirm this low again until we break the most recent highs. So as this is coming down, we are waiting and waiting and waiting until we get this high break. Now, once we break that high with this impulsive move, then we can move our stops up to this level, okay? Because we are trailing them up below the most recent low. But only when we take out this high here that this low is confirmed as a low, okay? And again, price then moves up. We are still in this trade. We've moved now this trade up to here because we are moving with the trend. And we want to take as much of that trend as possible. So as the market moves up again, we wait for another counter trend move. Now, what do we think? Before we know anything else, we're saying to ourselves, well, we're not going to move our stops up until we take out this high, because quite easily the market could just drop down. We don't know this. All we need to do is follow our management rules and the market will show us what it wants to do. So for example, as this pulls back again and takes out the high, then we go backwards to find the most recent low here. And then we move our stops from here to here. And we just keep riding the trend all the way up. So the next one will be up again. We get a counter trend move. This low is not confirmed until we break this most recent high here. Once we break that, we come back down. This is our most recent low. And we move our stops up again from here to here. So you can see you're trailing your stops up, but you have a reason to trail them up. You have a reason because we know with a trend that this is how a trend moves. So this is the safest place for us to move our stops to get the most out of the market. Now, what happens if the market then turns around? Then it takes us out, okay? And what you can see is that this is where our stops are because it's below the most recent low. Okay, but you can see what we have done is we trailed our stops up with the trend. We've taken all of this profit and it's taken us out once the trend has changed. Okay, so the same goes for a downtrend. So as we are coming down, we get a pullback. Okay, and again, this high is not confirmed until we break this low. And as soon as we break that low, then we can move our stops here, which is above the most recent high. And again, the trend continues. And then we get another counter trend move. And what we want to see is whether this low will be broken. Because if this low is now broken and the trend is continuing, then we move our stops from here to the most recent high, which will be here. Okay, so your stops then trail down. And again, the market continues to trend. And then what happens next? We get another counter trend move. So again, what we do is we mark out the lows. And as soon as that low is broken, we go backwards to find the most recent high, which is here. So then we move our stops from here and we move them down to here. Again, taking the most from the market, but having a reason to move our stops. Like sometimes you'll hear someone say, once we get to 1%, move your stops to break even. Now that has no theory behind it. All that is showing you that that person has fear of loss. They don't have any reason to move their stops. But here we have logical reason to move our stops. And that's the reason that we're moving them. Because we know if a trend continues, that if we have our stops above the most recent highs, that they are more likely not to be taken out until we have a trend change. So the same goes for this. It comes down again. We get a counter trend move. We mark our lows and we know if it breaks this low, we go backwards. We look for the most recent high. And again, we move our stops down. So now you've taken all of this from the market and you don't have any bias. There's no bias in the market. All that you're doing here is you're letting the market show its hand. You're letting the market show what it wants to do. You're not saying to the market, well, I'm going to put my stops down here because I know it's going to go. Well, you don't know this. And this is the great thing about guerrilla trading is we don't have any bias in the market. We let the market do all the talking for us. So for example, the same thing might happen here. It drops back down again. Now we get a pullback, right? What do we do at this point? Well, now that we've had a counter trend move, we mark out the lows because we know if that comes down and breaks the low, we're going to move our stops. But actually the market continues up. And what happens? We get taken out above the most recent high. And this is showing us that the market now trend has changed upwards because we've taken out this high. As you can see, this trend now has finished and the trend has then gone to go up. So this is why we manage this way. And what we do is we always have the same management rules. We always put it beneath the most recent low when we break a high, and we put it above a most recent high when we break a low. And we keep it the same way. This is the only management rule that we have. Now, there are many reasons that we do this, because when you have a smaller account and you trade this way, it's very easy, right? And sometimes it's very easy when you have discretion. But when you start growing an account or you start getting large investments, right? What happens is on your psychological brain, your mind or your subconscious, it will start playing games with you. The reason I say that is if you are, for example, trading a £10,000 account right now, and you all of a sudden get an investment for 10 million, right? And you have discretion in your trading, in your management. As soon as you start getting a little bit of profit and you start seeing those numbers, you're going to start closing trades because you're not used to seeing those figures, right? As soon as you start seeing a pullback, you'll close the trade. But what we have done here, we've given you a foundation of how to have a great management rule that will always be the same, no matter of your account size. We take away all of the discretion because actually, you know, as soon as you break a high, you move your stops below the most recent low here. So for example, if you had a 10 million pound account and it breaks the high, you're going to put your stops here, right? If you have a £100 account and you break the high, you're going to have your stops here, right? There's no discretion. You move your stops always the same way. And you don't realize that we've done this to really simplify it, because we know that you're all going to grow and have big accounts. Okay, guys, so what I'm going to do now is I'm going to jump onto some charts and show you what it looks like candle by candle. So here is the euro US dollar. What I want to do, guys, is I don't want to show you entry points and stuff like that. I literally just want to show you how we're managing. So I'm not going to be scaling or doing any of that sort of movement. All I want to do is show you exactly how we manage our trades. Okay, so as you can see here, we got in this position because it was a bullet position. We had this ascending nature. It broke the most recent low and retraced. Okay, so once we're into this position, what are we looking at? Well, we know that we want to get with the trend, right? And we know that the most recent low, we need it to be counter trend and then to drop past the low. Just like I stated and showed you guys, it needs to come down. We need a counter trend move. Then what we need is for this low here, which is the most recent low, to be broken. Once that's broken, then we confirm that this is the most recent high and we move our stops above that. Okay, so let me show you how that looks live on a chart. So if you can see here, guys, what we're currently looking for now is a counter trend move. How do we know it's counter trend? Well, that is if it doesn't break the next candle's low. So every candle here has broken the next candle low, showing us that the trend has continued. And as you can see, the very next candle, even though it was a blue candle, we still took out the next candle low, which means we are still on a downtrend and haven't had a counter trend move yet. As you can see now, this candle has closed and it hasn't taken out the previous candle's low, which means it's a counter trend move. So now what we'll be looking for is we would be looking for the market to come down and break the most recent low, allowing us then to confirm the most recent high. And as you can see, this candle just done that. The good way, what you can do, guys, if you're new to this and you don't really know if sometimes it looks pretty close, you can look up to this corner here and it will show you the highs and the lows of that current candle. So if you put your cursor over that candle and you look up there, the low will say 590. Okay, and then you put the cursor over the next one and look at the low, it's 584. So you can see that this low was lower than the previous one. So that means that we have now broken that low, which means we can move our low, and then we work backwards to find the most recent high. So we know that this was the counter trend move, and that was the highest point, which means now that is our new most recent high. So what that does is it allows us now to lock in profit. And this is what's so fantastic about the strategy we use and our management, is that we get to lock in profit very, very quickly. Now you look how much that's moved. It's hardly even moved, yet you've taken all of the risk off the table. Okay, and that's what's so great. We learn to manage risk and we let the winners run. Okay, so now what are we expecting? Well, we expect price to continue down. Okay, and for it to do that, we need it to break the next candle's low. And as you can see, it hasn't, which means we are now having another counter trend move. So we need to now see what happens next. Is it going to come down and take out the lows? If so, then we will have a new most recent high. If not, it could take you out for your stops, which means we will then have a trend change. And as you can see now, this candle has broken the most recent low. Okay, so this candle now becomes the new low. And if we go backwards, okay, and we see where the counter trend move is. So the counter trend move started here. The highest point is there, which means that is our new most recent high. Okay, and as you can see, guys, now we have locked in profit, and you can see that we are moving with the market. We have a reason to move our stops. Okay, we're not just moving our stops just for the sake of moving it. We're moving it for a valid reason. We know that the trend moves in this way. Okay, we know that it moves like that. So obviously what we want to do is keep our stops above the most recent high, and it will keep us in the position as long as possible, as long as we are with that trend. Okay, so at the moment, as you can see, what I would have done now is I would have locked in profit above that most recent high. Now, everyone has to test and back test their own way of doing it. You can have it a pip above, 2 pips above on the line. It's completely up to you. Okay, so you can, the most important thing is to have it above that most recent high. Okay, so what am I looking for next? Well, now we've locked in 0.64%. Okay, we have no risk on the table. Now what we want to do is we want to continue with the trend. We want to keep moving our stops down until that trend changes. Okay, so let's carry on. And as you can see, this candle has broken the previous candle's low, which means that this is currently the low. Okay, we haven't had a counter trend move yet until the candle doesn't close above it, the next candle. So as you can see now, that candle has closed above this low, which means we now have a counter trend move. Okay, and price has come up counter trend, but it hasn't taken out our most recent highs. Okay, and as you can see, the market has come up very close and then it's come back down. So what we need to do now is just to be patient. We know where our stops are. If it takes us out, we're completely happy with that, because that means then we have a trend change. Because if we take out this most recent high, it means the trend now has changed to the upside. So what we do is we just wait patiently and see what the candles want to form like. One thing we do know with price action is we know that we have this large wick and we're more likely to range inside here. So this is when we need to be extra patient and just to see what and this is the great thing, guys, about our management is we always know where we're putting our stops. And this is why the discretion, we have no discretion, because we always know where our stops are going. Our stops will always be here, whether you have a £100 account or a £10 million account. You're not going to change where you put your stops. And this will help you a lot with your psychology once it comes into getting bigger accounts or getting a large investment. It's not going to play on your mind, oh, shall I get out now? Well, no, you have a rule that states you always have it over the most recent high or below the most recent low. Okay, so as you can see, the market has just broken this low. Okay, so that is the new low. And then what we do is we go backwards to find the most recent high. Now, how do we find that? Well, what we want to see is this is a range, right? It's come down. So once we broke it, we need to go back up to find the most recent high. Now, what we look for is a counter trend move, which, as you can see, this market here, there is a counter trend move, which is this candle, right? It's counter trend. And then we've come down and carried on going down. Every candle after that has broken the lows, okay, stating that it's still on a downtrend. This candle here is the only counter trend candle. So we move our stops above that, okay, our most recent high, and we move our stops down, okay. And as you can see, we are now just following the market. We've currently locked in around 2%, and we're just letting the market show its hand. As you can see, we broke the low again there. And what we're doing, guys, is we're just following the market, okay? And as you can see now, we again have had a counter trend move. That candle hasn't broke that low. So now what we need to do is to break this low to confirm we have a most recent high. As you can see, price is just ranging for a bit. And then we break this low. Okay, so this will become the new low. And then we're going to work our way backwards. Where's the most recent high? Well, it's here because we've had this counter trend move, and that is the highest point. So then we move that along and we move our stops down. And this is all we do, guys. We just follow the market. Let the market offer whatever it wants to offer us. We don't have to have that making decision, which is so vital when it comes down to management, because when you start trading massive amounts and all of a sudden you're looking at the figures and it's massive, because you're not used to that. You could be trading 10, 20, 30 times the size you're trading now. And where you used to trade maybe a stop loss and your maximum loss was a couple of £100, now you're in the tens of thousands. It makes a massive difference to have a set rule of management. Okay. So that's what you can see. That's the most recent high, most recent low. And as you can see, we've now locked in 2.24%. And then we just carry on. broke the most recent low. As you can see, because it's broken the next candle, we move it to the new low. And again, even though it's a blue candle, we move it again because it's broken the most recent low. Okay. And as you can see, this one now is counter trend. It hasn't taken out the previous low. So now what we want to see, like we just saw there, is a break of that low. Now we have to look at the counter trend move. That will be the highest point of the counter trend move. There. This will be the new low. Okay. And as you can see, then we will move our stops down above the high. Okay. And as you can see now, guys, we have now made 4.29% locked in. We've done it exactly the same if we had a big account or a small account. There's no discretion. Okay. And then all we're doing, guys, is we're following the market and letting the market show its hand. Again, we've broken the low. We move our lows down. And again, next candle has broken the lows. Move that down. Okay. And again, we've had now a counter trend move. It hasn't taken out the previous low. So we have a counter trend move. Now what we're waiting for is to see whether we can break the low again, which will allow us to have a most recent high. And as you can see, price has done that. So then what we do is we now move this one down to the highest point after the counter trend move. And then you can see this is on now our new low. Okay. And then what I'd say is price then comes, your stops then come all the way down. And as you can see now, we've locked in 5.68%. And you can see because of our management, it allows us in the safest way possible to take as much profit as we can. Okay. Let's carry on. And as you can see, again, we've had this counter trend move. We need this low to be broken, and then we can confirm the most recent highs. And as you can see here, price would have then taken us out. Okay, because from that counter trend move, we had our stops above the most recent high, and it's taken us out for 5.68%. And as you can see, guys, this is how we use our management. And this is why it's so vital that you stick to the same management rules, because this will allow you to have minimal risk and maximum amounts of profit. So here's another one on the euro Japanese yen. So as you can see here, we got in on the bullet. We had a descending nature. Prices broke the most recent highs, and then we have got involved. Okay, so as you can see here, guys, I'm going to show you just management, not any scalings or anything like that. I'm just going to literally show you how I'm going to manage this chart. So as you can see, we've got involved in this trade now. And what we're waiting for is we're waiting for price to break the most recent highs for us to lock in more profit. Okay, and as you can see, price came very close to my stops, didn't take me out, and then has come up and taken out the most recent high, which allows us then to reduce our stops down by about 1 pip. Okay, and then as we continue upwards, we are now moving our stops up higher, moving our lows to there. And then what we want to do is we want to recognize every time that we get a counter trend move, because it hasn't taken out the next candle's high. Move this over a bit. So because this one hasn't taken out this high now, it's a counter trend move. And we're looking for now a price to break this high for us then to reduce our stops even more. Okay. So as you can see, we've moved back. And then this candle here has now taken out the most recent high, which now allows us to find the most recent low. So if we go backwards, this will be the most recent low. It's the lowest point. And we would now have our stops locked in profit. So as you can see here, our stops will be below here and would be locked in at 0.62% profit. Okay, and then all we're doing, guys, is we're just letting the market show its hand, and we're just taking the market as it comes. We're not trying to work out and tell the market that it's going to go up or that it's going to go down, even though we can see that price action is starting to ascend because it's breaking highs and retracing, breaking highs and retracing. We can clearly see that it has an ascending nature, but I'm always going to manage it with the trend. Okay, so we stick behind the most recent low, knowing that if the trend continues, we will be safe. Okay, So as you can see, then price action has continued up. So as we broke that high, we then come back down, find the most recent low, which would be here, which allows us to then put our stops up even more. So we now got nearly 1%, 0.9% locked in, and we just keep going. Okay, and as you can see, we then broke the high again, and we haven't become counter trend yet. Okay, and then as you can see, guys, price action has come down and taken us out. And you can see here we took a 0.9% profit. So you can see, even though the market hasn't really moved much, okay, the market hasn't really done much movement, but what have we allowed to do? We are allowed to manage risk. Okay, we took the risk off the table and we've actually squeezed nearly 1% out of this trade. Okay, and this is what's key about the guerrilla strategy, and especially on management, is we don't have discretion. Whether you have £100 or you have £10 million, it's always going to be the same management rules. Okay, so this is what it looks like when we have a slightly corrective nature, but yet we can still extract profit. So here's another example on the Aussie US dollar. And with this one, we got involved in the bullet. So as you can see, we had this ascending nature. We pulled down, broke back to it, and then we got involved in the trade. So this is not so much about the entries, but more about how we manage after we get into the position. So as you can see here, we have the most recent high, the most recent low. We got into our position, and currently what we're expecting to happen is for the trend to continue down. Okay, so we expect the markets to go up as an ascending nature, break down, give us a pull back to that level, and then drop. Okay, so what we're looking at now is to see what happens once we break the most recent low. Okay, and if we break it, then can we manage to move our risk? Because it's all about managing risk and reducing as much risk on the table as possible. Okay, so as we go down, you can see the very next candle has taken out that low. Okay, so we go back up, find the highest point. That will be the most recent high. So as you can see already, just from a 1 hour candle, we already reduced our stops to near enough just above half. Okay, so about a 0.6% risk on the table. And as you can see, this is what's so fantastic about our management, is we manage risk very well. Okay, and even if we take losses, majority of the time they will be at a reduced risk. Okay, so at this point, as you can see, we've now broken the low. This will be the new low. At the current time, we still have risk on the table. So what we're waiting for now is another counter trend move, and then the low to break for us to put our stops above that high and give us reduce our risk or give us profit. Okay, so as you can see, the next candle has taken out the previous candle's low. So it means the trend has continued down. Okay, and as you can see, the very next candle has done the same thing. So at this point, we haven't locked in any profit. We still have a reduced risk, and we're still currently running. We're waiting now for a pullback and then a break of that low before we manage to reduce risk even more. Okay, and as you can see, this next candle has taken out the next candle's low. So again, we just keep moving our lows down until we get this counter trend move. And again, no counter trend move, we just keep going. Okay, now this is the first counter trend move. How do I know that? Because this low here hasn't taken out the previous candle's low. So what we want to see is once we get a pullback, we want it then to break this low here for us then to reduce our risk. Okay, because we're trading with the trend. So as you can see here, price has then pulled back up again. And all we're doing is waiting for price to break this low to then confirm the most recent highs. And as you can see, price is still pulling up. And this candle here now has breached the low. So as soon as we breach that low, we normally set an alarm, okay, at that level, and you'll normally get alerted either on your phone, or if you're by the screen, you can keep an eye on that. Or you can have it alerted on your computer, so you can hear it ping as soon as we break that level. And that will then give you the information you need to move your stops. So where we had our stops here and we had a 0.6% risk, now we move to our most recent high. because as we go from the low, we go up, that will be the most recent high. And as you can see, then what we do is we lock in profit, and we lock in 2.66% profit. So worst case scenario, that is what we will take. I'm not going to scale into this position because I'm only going to show you how we are managing. Okay, so as you can see here now, this is the most recent low, most recent high. So what we're doing now is we want the trend to continue down, and what we'll do then is just manage above the most recent highs. Okay, so as you can see, that candle has continued to push down with the trend. It's broken the last candle's low, so we just continue moving the low line until we get a counter trend move. Now this move here is not counter trend because we've broken the most recent low. So that low there, the next candle broke it. So even though it's blue, it's still part of that same trend. Okay, and this very next candle you can see now has actually not taken out that previous candle's low. So it is now counter trend. Okay, so now what we're waiting for is for price action to give us this pullback and then break the most recent low here. This will allow us to then lock in more profit. Okay, so let's see how we do this. Let's see how it goes. And as you can see, this candle has continued to go up. It's counter trend, and we need this most recent low here to be broken before we can move any of our stops, because any of these most recent highs are not confirmed until we break the low. So it could continue going up here and then break the low. And that's when this level here is confirmed, because we broke this most recent low. Okay. And as you can see, that very next candle then broke the low. Okay. And what that's allowed us to do is to go back up, find the most recent high, which will be up here. And as you can see, then what I'll do is I'll put that there. This will be our new low. And as you can see, then we're locking in more profit above that level. And as you can see, 5.53% locked in on this trade. And then what we're doing, guys, is we're letting the market show its hand. We're not trying to guess where the market wants to go. We let it show its hand and we just take advantage of that. Okay. And as you can see, market's continued and then it's taken me out. Okay. And this is how we trade, guys. This is how we manage the charts. And as you can see, we take a majority of that until we have a trend change, which as you can see, it's broke the most recent high and the trend has now changed to up. So that's how we manage our trades. This is another example, and we locked in 5.53% profit.